Well, hello. It is Friday, the 26th of July. I'm Bill Roller, and I'm here with Mike Elerath. We're here with Beacon Rock Wealth Advisors, and we have Michael Harding of Keller Williams Realtors talk about finance and real estate here in beautiful Clark County. It's been an interesting week. It was pretty volatile this week, but the Dow ended up 0.75%. The Nasdaq Composite dropped 2.08%. The S&P 500 was off 0.83%. The 30-year Treasury was up a microscopic zero point 0.6 basis point, and the 10-year dropped 3.9 basis points to an annual yield of 4.2. The 30 years at 4.4626, excuse me, 4.456. Kind of the big news was some interesting changes in the yield curve, where the yield curve uninverted. So we're seeing a steepening of the yield curve, drop on the short end, back up to the other end. So that may or may not be bearish. So some concern about the market, which is probably the source of the sell-off, as well as the a drop, a stronger yen actually. The yen was up, which raised the costs, I guess you could say, for the yen carry trade, which is one reason the Nasdaq had a couple of hard days. Kind of recovered a lot today on Friday for the end of the week, but we'll get to see what next week brings. So, Michael Elerath, what do you got on your side of Wall Street?
Well, yeah, I see that the personal consumption expenditure price index dropped 0.1% month to month. It was steady previously at 2.6 annually. Now it's at 2.5, raising more expectations and anticipation that the Fed will start making some interest rate cuts. Some are factoring in 3 by the end of this year. We've seen and heard that before, so we don't know if that's going to happen. But we did see a broadening of improvement in the market. The Russell 2000 was up 1.3%. And that's part of the news that some investors have been waiting for, to have the markets outside of the tech area start to show some traction. So that raises some optimism. And the interest rate dropping has helped rate-sensitive sectors such as home builders and also technology. Treasury yields dipped a little bit this week. And I did a calculation on what happens with note and bond prices when interest rates go down. If I owned $1 million note paying 5%, I'd get $50,000 interest income. If a year from now I wanted to sell that note and I wanted to sell it, I could sell it at a profit. If I wanted to find an investor to pay me a premium of $50,000 on that $1 million note, perhaps I could do that, and that investor would earn 4.2%. And that in a future situation where there was the 4 rate cuts and the rate was down to 4%. So when rates go down, bond values, note values usually go up because the interest rate that they pay is higher than what you could then buy at the current time. The stock movers today were industrial. 3M was up 19%. And Mohawk Industries, which does flooring products, was up 19%. Newell Brands, which is in the consumer home and commercial solutions, was up 39%. And the other sector that I noticed there was quite a few up stocks was the healthcare sector. Either risk solutions and health solutions, or biopharma and managed healthcare. Those showed gains, spectacular gains today. That's the nut and bolts of what I have today, Bill.
Yeah, and of course, we mentioned we were talking earlier about Dexcom medical devices, uh, which off 40.6%. Uh, Supposedly, it wasn't really due to Ozempic and the rest of the weight loss drugs, but was due to execution. Probably a combination of both. But if you've seen the Dexcom ads on Fox News, you can buy the company a lot cheaper today.
So is that do they sell that product with the ladies that dance around um uh celebrating their weight loss?
No. Dexcom is a blood sugar monitoring uh, solution.
Right. So
Uh,
they're okay. I
so,
know I knew they were glucose monitoring. I thought you linked it with the weight loss too.
well, supposedly that there was some thought several months ago that the rise of the weight loss drugs would eliminate the need for glucose monitoring. That's not the case, from
No, and yet
everything I
that
understand. But
wonder if they've got some shakeup coming in, some oversight or some internal
yeah,
problems.
well, there are three main glucose monitoring companies. Insulet Corporation, symbol PODD, which it was up 3.23% today. Tandem, TNDM, uh, Tandem Diabetes Care, that were actually off 1.57% for the day. At one point, they were down about 8%. And then, of course, Dexcom, DXCM, which we mentioned earlier, down 40.58%. So, the interesting dynamic in that market. Of those three, Dexcom was kind of considered the 100-pound gorilla. Now it's kind of the 50-pound hamster
Hmm.
of that. So we'll see. But as we all know, tomorrow's another day, and any one thing we've learned in the stock market is anything can happen at any time. So be prepared for the changes. So, Michael Harding, what's going on in real estate? Anything good?
Well, there's no 50-pound hamsters or 100-pound gorillas that I can see this week, but there was a significant drop in the list price and the sold price. But if you would, Bill, could you please bring up the spreadsheet?
Yes, sir. Sure. Here we go.
And if you take a look, you'll see that the new to market 212, which is in line with what was basically the same value last week. We were over 200 last week and this week, and so that's great news because again we're in the the buying frenzy season. And then the price change. There was I would say a substantial drop. What is that, 50, 53? So that's a pretty sizable drop in 1 week. I would like to see the pendings and the solds gain a little bit more traction, but overall the market's doing really good. If you notice in column I, last week we had an average list price of $662,972. This week, $610,153. I just think that's just the market for that time. There's really no rhyme or reason that I could find, other than the average price per square foot. But that really doesn't explain too much of why it dropped such a steep amount. But overall, the market is looking good. It really is. And last week I mentioned that this week I would try to have some data to show why now is a good time to buy. And so, Bill, if you could you bring up the interest rate slide?
Keep talking. Give me a moment.
Yeah, yeah, yeah. Well, because what I did was I went back to 1972 with the mortgage rates, and then I found the last time that the mortgage rate was below 5% or 5% or
Which interest?
5%.
I'm sorry, Michael. Which interest rate slide did you send that to me? I'm not seeing one.
Yes, I did. You didn't? Well, hopefully. Well, okay. Well, maybe I should say that
Well,
because
here,
I found the data on my laptop, but I'm on my desktop now,
okay, no
and
problem.
I thought I sent it.
Uh,
So, but the last time the interest rates were at 5 was 2011.
here you
It
go.
was a week. Well, yeah. Well,
2011. Actually, well, 2014. You can see.
yeah. Well, I don't know, but if you wait for the interest rate to drop, then you're going to put yourself in a disadvantage, non-advantageous position because the rate of the market is going to continue to grow. And what I did is I went back to that time because there was a time. Now, wait. Well, let me back up a little bit and explain. I did purposefully exclude that downtime we had when the interest rates were around 2.5, 3%. I did bypass all that because I'm well aware that the interest rates were a lot lower than 5 at one point in time since 2011. But however, excluding that time frame, the last time that the interest rates were at 5% or lower was 2011, and so the average price for a home in 2011 was 221,000. Last year, the price of a home, excuse me, on average for Clark County is over 600,000. So if you're waiting for that interest rate to drop, you're going to put yourself in a awful position because you're going to have to pay a lot more for a house. So the value of the interest rate that you'll pay or that you're charged will go down, but the value of the house that you purchase will go up on average. So I just think that if anyone's on the fence, that they should contact someone and have a discussion about why now is a good time to buy and what's out there and what your particular needs are. So that's all I wanted to say for this week, guys.
Okay. Any gentlemen like to add on that? If not, we'll stop recording.
Nothing for me.
Okay.